In today's video, we're looking at Bitcoin. Where are we going next? We've got some sentiment analysis, on-chain data, and even some narrative analysis as well. We've just gone through a lovely bullish cycle for 10 days of green candles, and now we're seeing a bit of a retracement, which is rather healthy. But let's see exactly what the market's saying to us right now and where are we going to go next. If you enjoy the content in today's video, make sure you subscribe to the channel and also check out my Patreon. Link down below. If you are interested in gaining some free Bitcoin, there is a fantastic offer over on Celsius right now. You get $50 as a sign-up bonus. So if you haven't used Celsius before, download the app. There will be a link to that down below as well. And if you do deposit $400 or more on the app, leave it for 30 days, they'll credit your account with $50 of Bitcoin. After that period, once they've credited your account, you could always remove all the funds and make off with a nice $50 bonus. So from July 21st, we put in 1, 2, 3, 4, 5, 6, 7, 8, 9, and 10 green candles in a row, which was rather fantastic. The sentiment in the market and general mood picked up tremendously. However, we started to see a bit of greed in the market here. We peaked out around 42K, which was an area of significant resistance that we expected to run into, and some profit taking did occur. Some people selling the bounce off and maybe recouping some losses or exiting the market at that point. Since then, we've had 1, 2, 3, and 4 daily red candles. And then today we were actually red for the most part of this morning, but until the New York session opened around an hour and 15 ago from now, we were down here around 37.5, 37.7. Then New York opened and we started to move upwards. So clearly some bullish sentiment from the New York traders. So a period of consolidation going on. We're still in this choppy range here. No immediate cause for concern either way. I would note that the volume is still very low and we would like to see increased volume to actually pull us up and start getting us bullish again. Some nice big green candles that we saw during this period when we started rallying from the 30s into the 40s and 50s and beyond. Right now, it looks a little bit weak in terms of overall volume, but that being said, the price action will do what it wants to do, and even with low volume, we can still move quite a bit higher. As we will see from the on-chain data, things are looking bullish again. But first and foremost, let's start with the news narrative right now, because we had the news narrative of the B-word conference, Cathie Wood, Elon, Jack Dorsey, all getting involved and pretty much pumping our bags here. Everything was looking on the up for Bitcoin, ESG concerns starting to be, moved past a bit. Everything looking a bit more positive. And this was what I think caused the price to continue going back up here after a capitulation event. Of course, you're going to see a bit of a reversal, but that was the sentiment in the market. We had a positive conference, and so the narrative was all to do with positivity for BTC. Firms coming in, we're seeing all those kind of news stories around big players, institutions putting their money onto Bitcoin and DeFi as well. Since then, though, we've not really had a major news narrative, but one that's been looming on the horizon is all about regulations. Everyone's worst nightmare, their least favorite word in crypto regulations. And of course, the new chair of the SEC is Gary Gensler. If you don't know who he is, he actually taught an MIT course on crypto and digital assets for roughly 3 years. The lectures for which are actually online on YouTube. Go and check them out. They're actually a really good watch, and you can get a feel for the depth of knowledge that he has for crypto. And he is very knowledgeable in the crypto space. And I believe within the lectures, he did say that he owns Bitcoin. So this guy's in no means an enemy to the crypto markets. But as he says in his own words, if crypto is going to be widely adopted, it needs some rules of the road and a cop on the beat to enforce them. And Gary is that cop. To be clear, I am technology neutral. What I'm not neutral about, though, is investor protections, citing things such as fraud, rug pulls, and all of those things that do plague the crypto markets, which is fair enough. So his job role now is to try and clear up the crypto space. But in the video he posted yesterday, which you can check out a shortened version here on his Twitter, it was rather, quite negative towards the crypto markets. People expected him to be a little bit more friendly. You can check out the full public statement here over on the sec.gov website. But we'll go through some of the, I would say highlights, but they're not really highlights here. So he talked a lot about digital money. So the fact that we've moved to a digital society during the COVID pandemic. He cites we now pretty much have digital euros, yuan, sterling, etc. And such public fiat monies fulfill three functions of money, which are to be a store of value, a unit of account, and a medium of exchange. But he says that no single crypto asset, though broadly, fulfills all the functions of money. Well, they do fulfill the store of value narrative. Bitcoin definitely does that. And a unit of account, I would suggest, but maybe not the medium of exchange. And part of the reason for that is because if you do want to go and exchange your Bitcoin for, say, a Tesla, you have to pay capital gains. So the way that this is taxed actually makes it quite unfair to say it's not fulfilling all the attributes of functional money. Because in my opinion, the rules need to be changed on how we actually go about taxing cryptocurrencies and how you can spend it. We want to be able to spend it like money, but of course we don't want to be paying 20, 30, 40, even 50% in certain jurisdictions on capital gains for just relinquishing control of your crypto assets. You're of course going to be using cash instead. So within this statement, he talks about crypto being a speculative investment and that only, and it doesn't really fulfill any other purposes at this moment in time. But he does go on to say that he would not have gone to MIT and taught the course on crypto and technology if he was not interested in how this can expand access to finance and contribute to economic growth. So there are some silver linings within some of his statements here. But he also talks about the SEC and its position on this, citing the fact that there's fraud, scams, and abuse in certain applications. In many cases, most investors aren't able to get rigorous, balanced, and complete information on what they're actually buying into. So many of these securities, and he's now quoting about ICOs, these tokens are offered and sold as securities. There's actually a lot of clarity on that front. In the 1930s, Congress established the definition of a security, which included 20-ticket item, stocks, bonds, and notes. One of the items is an investment contract. So he's actually quoting an old piece of regulation there from the 1930s, which kind of makes you feel like this needs to be updated for a new digital world. But the most important thing here is that he's suggesting that all of these ICO coins, which the majority of the altcoin market comes under this bracket, is actually a security, which brings up further issues when it comes to actually exchanging these on centralized exchange primarily. Big American exchanges, Kraken, Coinbase, for example, are listing these types of coins, which are definitely securities. If we are to take what he said here literally, they would be deemed as securities. And these exchanges are not actually commissioned to exchange securities. So the problem we have here is there is a potential for some of these tokens to be delisted. Clearly, this is not going to go through straight away, but this is something to have on the horizon in the back of your mind, thinking about what are the potential negative connotations if they start deeming a load of tokens securities. Will they have to be traded on non-US exchanges only? And what other crackdowns are these guys going to implement? Because within this, they talk about DeFi, they talk about lending and borrowing platforms, and how they want to make these more secure and more tightly regulated as well. We've seen with Uniswap delisting synthetic assets of stocks recently from the front end. This is the kind of thing they're able to actually apply pressure when there is a central point of control in the USA. And so it does seem Gary is hot on the case for actually pushing through some changes here that will impact how we transact with crypto platforms and specifically the assets as well. So from these statements and that video released, he kind of came out all gun blazing, showing he was the new cop in town and that changes are coming in the crypto markets. So we did see a bit of a sell-off over yesterday, a little bit of a bounce today. So it certainly doesn't have seemed to have caused any capitulation events, no major moves. But if there's continual rhetoric around this, and of course with the US infrastructure bill, they've slipped in a load of crypto stuff in there as well. This is something to be thinking about because it could negatively impact prices going forward. This morning, however, he has been on the Squawk Box news channel. So this has been a little bit more positive. Since then, the prices have gone up from when he was on there because his kind of rhetoric around this seemed to get a little bit more positive.
The balance between regulation on one end and innovation on the other, where do you think you lie? Because I think that there's a large question in this country about where the United States is going to stand long term when it comes to crypto and crypto innovation. You spent 3 years teaching classes about crypto, so you're an expert in this topic.
I'm very pro-innovation. I think it helps the economy grow. I think more people get access to finance and access to good medicine, access to good jobs. I think I wouldn't have gone to MIT. I've been a professor there for 3 years at the intersection of finance and technology among some of the world's remarkable experts at MIT. So I count myself as pro-innovation, but I think that we also need rules of the road. The automobile came along 100 plus years ago, and if we didn't have rules of the road, Detroit wouldn't have been able to sell those automobiles, those good factory jobs wouldn't have been created, those good union jobs wouldn't have been created. Right. Without rules of the road, the people had confidence and trust in the automobiles. Similarly, we need trust in markets and trust in finance. This innovation, Satoshi Nakamoto's innovation, if it's going to meet its potential, needs to come within public policy frameworks.
So within that segment, it does seem that he is more pro-innovation and certainly doesn't sound like he wants to stifle the crypto markets. So this is more of a positive slant from his 24 hours earlier. The other video that he posted seeming a little bit more, tough love kind of thing. So this certainly seems like it could be a positive for the crypto markets. Clearly regulation on the short term is probably a bearish thing with people being a bit spooked, but in the long run is definitely a bullish thing. And down here, Michael Saylor posts, regulatory clarity will overall benefit Bitcoin. So something to be aware of for the future, but certainly not going to kill off cryptocurrency and BTC, but worth having on your radar. So I titled this video, Bitcoin Where Next? So I wanted to map out something here on the Trader's Reality channel, where he goes into a lot of in-depth stuff with short-term trading. And within this, he shows how market makers control the market. When you're buying and selling, it's the market maker that's facilitating that. And essentially, they control price. And within these boxes here, these are points of liquidity. So these are liquidity pools that the market maker sets up and typically comes back down and takes at a later date. So from July 26th, when we had a big move up from the low 32K region all the way up to around 37,000 here, he took out a load of short positions and left a lot of liquidity here. Then he had a retrace, rise again, left some more liquidity here, and then we went up to around 42,000 bucks around the 31st of July, 1st of August, and then we start to retrace again in this kind of formation, down, retrace, rise back up, and down again. So the thought process here is the fact that the market makers have just taken this liquidity pool over the last few hours around that high 37, early 38K region. We dipped into that this morning, and now they are retracing back upwards, but this huge liquidity pool down here is an area that many people do believe we're going to come and visit. And when you look at the liquidity the market makers have left behind here, and this does tally with TA because a lot of people are expecting us to come down to around this mid 30K region, which was previously a level of resistance, come back down, tap it, make it an area of new support, and then we go up from here again. So this would align with the market makers approach of coming down, taking all this liquidity, and then sending us up once again. The market makers' job is to wreck as many people as possible, and this is what they do successfully day in, day out. But just another perspective on the market in terms of how the market makers work there. So now diving into the actual on-chain statistics for Bitcoin, the balance on exchanges, this yellow or orange line, depending on if you're colorblind or not like me, you can see from this that over the last few days in specific, the balance on exchanges dropped off an absolute cliff with huge withdrawals of BTC from exchanges. The coffers are running quite dry, back down to levels that we saw when we were back up around the high 50 to low 60,000 region. So there is a supply shortage and a supply crisis for Bitcoin going on currently. If we also look at the supply held by short-term holders, when price was high, the short-term holders were coming in, buying up the FOMO, and then capitulating, selling off. As this happens and the weaker hands, the younger investors, exit the market, the price does go back up. And this tallies with the exact opposite of what the stronger hands, longer term holders are doing. And you can see this mapped out here as the BTC price was going up. These guys were shelling their BTC, getting rid of it, selling it off, taking advantage of the higher prices, and then more recently reaccumulating. And we're back at levels of around 12,250 Bitcoins that we saw around this region here in the summer of last year when we went through a major accumulation phase before this meteoric rise once again. So you're seeing the long-term holders adding to their stacks here, and this contributes to the supply shortage and should mean higher prices coming our way. On the stock to flow model here, we've had periods where we've deviated massively from the actual S2F, and once this happens, we typically go on a parabolic rise as we try and realign ourselves. We've deviated too much, and it's time for Bitcoin to snap back into action and move back on track with the stock to flow model. 1, 2, 3, 4, 5, 6 occasions this has occurred on, the most recently being around June, July time here. And so what we typically get is a move higher for the Bitcoin price when these deviations occur. This deviation has just occurred, and so this would, in a historical context, be somewhere where we start to rip back up again. So again, a bullish signal. On the Glassnode's realized profit and loss chart, we did see a lot of investors actually realize a profit with the uptick in the Bitcoin price. And with that, drawdown from around 42K to around 37,500. It's quite clear that the $2.9 billion of profit realized this week, some of that was taken off the table. So there has certainly been some profit taking and some selling by investors. Realized losses are down to around 260 million. So as you can see from this May to June time, we are on a downtrend for that. So less people in loss, which is a good thing. Typically, you see with the psychology of the market, when people start to move into profit, they continue to hold as they expect higher prices. What have the miners been doing recently? Well, we were in a downtrend where they were actually not selling off many of their coins. Many of them probably moving around, setting up new locations and getting their miners up and running. So this line here at 300 Bitcoins per day, moving from miners to exchanges, 200 BTC or 100 BTC. As you can see, around June and July, we were trending downwards from around 200 all the way down to 100. But over the last couple of weeks, this has started to increase again. It's up 3x to around 300 Bitcoins, moving from miners back to exchanges once more. So again, this could be a reason for the decline in price as these guys are starting to take profits and selling off their Bitcoin to cover their expenses once again. But we can also note that this line here at 300 BTC per day is not a ultra high level like we saw up here, around 600 BTCs moving. It's 300, which looks to be around par for the course at the moment. So nothing to be too concerned about, but miners are certainly selling once again. And on this chart, we can see specifically the number of Bitcoin moving from exchanges to cold storage wallets or other. And this actually shows us that the significant trend is now down. So a lot of coins leaving exchanges, again, fulfilling that narrative of a supply shortage coming for Bitcoin. And this also tallies with the percentage of coins remaining on exchanges here. We're now down to the lows of around 13.2% of Bitcoin on exchanges, which is a percentage that we saw when our price was up around 60K. And on top of this, we're also seeing that smaller holders, the shrimps to the crabs as they're called, people who are holding from around 100,000 Satoshis all the way up to around 10 BTC have all been accumulating over the past couple of months. So this is a positive sign, and it shows that we're not in a bear market, as typically when we hit the bear trend, people are all selling off their coins, especially the smaller holders, but people are reaccumulating. I know I've been reaccumulating personally, and many people that I speak to are also reaccumulating. And so this seems to be a macro trend in the market, adding to our positions, getting ready for the next leg up. If we look at Google Trends recently though, the amount of BTC searches is down quite significantly from where we were just a few months back. So there does seem to be less global interest on the Bitcoin front. It does seem rather frantic within the crypto space all the time. But if you're outside of the crypto bubble, generally less people are talking about Bitcoin right now. And over on the crypto fear and greed index, we are now back in a state of fear, although this is more market neutral. A couple days back though, we were in a greed phase around 60, around 31st of July and the 1st of August. And then of course we did sell off. So this has been a very good indicator to suggest when to buy and sell your crypto. So in conclusion, to me, this looks like short term, we may have some more chop and bearish bias due to the fact there's regulatory concerns being banded around right now. And if this can sway the news narrative towards a more bear trend, maybe we'll start to see those low 30K regions where there is a lot of liquidity for the market maker to go and scoop up. But in the short, medium term, so I'm saying maybe a month, 2 months from now, I do believe we're going to be a lot higher than where we are right now. You can see from the on-chain data, things are definitely looking back up again. And the supply shock that is actually being caused can only see prices remain pretty much stagnant for only so long. Once that pinch is really felt in the market, price will go higher. It's happened before and it will happen again. So looking forward to the next month or two to see what kind of accumulation phase we go through if we get major dips, making sure we add on those dips and not being flooded out. It's the age-old problem once again of ensuring that you buy when the days are red and you sell when the days are green and not vice versa. But the trend certainly looks like it's going to go back up again. So fingers crossed, we're going to see some great momentum going into Q4 of this year and new all-time highs as well, maybe around Christmas time. A lot of people are suggesting that by the end of the year, we'll be at 100K plus. So do factor that in. You don't always have to wait for the perfect time to enter into your coins, because if we do trend to 100 grand by the end of the year, everything's going to be up massively anyway. So as Benjamin Cowan says, what's a few thousand amongst friends? If you enjoyed the content today, make sure you subscribe to the channel. Check out the Celsius promotional offer down below. Might as well get yourself $50 in BTC, and I will see you guys in the next one. Goodbye.